Okay, it's Tuesday the 22nd of November and we are on the Ftse 100. As always now with the live trades, if you want to see the overall market analysis, which was done pre-market, watch the review video of the same date. It might just give you a little bit of a better understanding of the reasoning for the trade. Okay, so today on the Ftse we have rallied since this morning. As mentioned in that review video, if we broke above this zone, basically, it was likely we would see a rally. Once the market has got up here, initial expectations were for this market to just come through and continue rallying, basically up into sloping resistance, which makes up the triangle which has been forming on this market recently, and that I've gone over in the Sunday analysis video. But what has actually happened is we've rejected once, twice, 3 times. We've then came up once again and produced this engulfing candle. The engulfing candle was my entry. Entered below the low. The market actually popped up as I entered, and I got a relatively good entry on this candle. Now, things I want to be careful of is down at these levels, basically, right here, where we have seen a reaction previously. I would like to see the market get down into these levels, for a target for this trade. So that's pretty much everything for this trade. That's what I am looking at. I just want to watch the market as it reaches here, because it has already bounced. And my target is going to be down towards 6.835 on this trade. My battery on my laptop is about to die, so I am going to pause this video and go and grab the charger. Okay, we're just coming down toward the management point now. Another thing to go over with this market today is price action has been relatively sluggish in its movements. For example, this candle right here at 11.55, it was a pin bar up until the last few seconds, so I mean 4 to 5 seconds, and in those 4 to 5 seconds it rallied up very, very strongly. You don't tend to see that sort of price action. It's usually the last sort of 25-30 seconds where the candle makes that last final push. It seems like there's very low volatility today in the market. I'm not sure why. Thanksgiving is Thursday in America, which means on the Wednesday, the second half of the trading day, it can be relatively quiet. But you know, it's only Tuesday, so I'm not too sure why this is going on. The only reason I can think is when we have trading patterns like this setting up on charts. So as mentioned, we have this triangle forming. What I'll do is at the end of this trade, when it completes one way or the other, I'll jump onto the daily time frame, I'll show you the pattern, and I'll show you more of the reasoning for the trade. But when we see a pattern like this, when the market gets to the end of the pattern, so towards the end where the price squeezes, you can see a lot of traders sitting out of the market. And the reason for that is they don't want to be caught on the wrong side of a break. So what they do is they wait for the market to make its decision before they get back into these trades. Okay, so the market is just coming down toward target now. Another little clue of low volatility in markets is if you look over at the price ticker, what is basically happening, you see it's sitting on 6837.3 or wherever it is sitting. It's sitting on exact decimal points for, you know, a number of seconds at a time. That's, you know, it's not normal price action on the Ftse 100. It's just a little clue that volatility is low in the market. It's one of the things I look out for, basically. Okay, so we've reached the management point. We've just broken through. I am looking for the market to come down into these levels to exit. If we just have a look, let's have a look. So I'm risking around about 11.3 points, and I'm looking to make 11 to 11.3 points. So it's going to be a 1-to-1 risk reward on the trade if it reaches the target level. Okay guys, so basically the position has came down to target right here. You can see it's popped back above, and then we've shown some bullish sentiment. Now what I've done is as the market popped through and came back, as this candle started to push up, I have closed 75% of the position and I've left 25% running. The reason for leaving the 25% running is because we've had such a strong move down. I wanted to see if the market could basically do what it's done, push back up into this level, which would then become resistance, and then push down again. Now, the market is very, very sluggish. So basically, I'm going to close the remainder of this position at sort of 6832 if the market can get down there. If it begins to pop back up above this level, I will close it out up there instead. When running your profits, it is definitely a good idea to let profits run. It's a way to reduce the risk on increasing your profits. So by that I mean I've already locked in a large portion of the trade at 1-to-1. And now if the 25% pushes back up, let's say it broke through here and I closed out up here, you've still locked in the vast majority of your position. It allows you to let those profits run. Let me just watch this market. I'm going to close it out at these levels. You can see the market basically holding on the ticker over here. It's been holding for sort of 4 to 5 seconds on some of these candles. But when you're letting your profits run like this, if you're running a small portion at the end, it's a great way to increase your overall profitability. I only do it on positions that have a high probability of extending the move, like the one we've just seen. And basically it allows you to increase your profits in that safe way. So I'd already locked in the profits. You add the small amount on at the end, and over time it really helps your account to build. So that, it turned into a better than 1-to-1 risk reward on the trade in 5, 10, 15, 20 minutes for the first portion and 50 minutes for the second portion. Also, on any other day, I would likely let this profits run further, but price action is so slow and choppy today. I could end up being here for 3 to 4 hours. I'd rather take the 1-to-1 risk rewards and finish up for the day. I'm just jumping onto the daily time frame to show you the triangle. Okay, so you can see price has been squeezing in these levels. Today, above this level, I was expecting a bullish rush up into sloping resistance. You can see the market just came up to just below the level. This is where it has rejected from. Just jump back onto the 5-minute time frame. So we got the bullish rush up, we got the rejection, 2, 3, 4th rejection was a much nicer setup for me than the previous ones. Took it after the engulfing candle, took it down to just better than a 1-to-1. So very nice trade, guys. That's me finished for the day. As always, hopefully that was helpful. I'm James Orr, and thank you.